Good morning, everyone. Today is Wednesday, September 8th. I'm Marv Eisen. Starting out today with the economic calendar, there are 3 reports due to be released. One at 10 a.m., job openings report, another at 2, the beige book, and at 3 p.m., the consumer credit report. And on these 3 reports, only 2 I want you to take notice of. The beige book, which is released 8 times a year by the Federal Reserve banks throughout the country. This beige book is a report of how they see economic conditions in their area. The consumer credit report, due out at 3, the previous consumer credit was $38 billion. Median forecast is $26 billion. So that would mean a constriction, a tightening of consumer credit. And you know what that means on the economy, a constriction of the economy, but that's off to the future. Nevertheless, yesterday, and I want to go to the news, and I don't want to dwell on it because the market has already opened today. Yesterday, in the news, I said I saw a report that because the pandemic assistance was ending, many analysts saw that as a negative in the stock market. And sure enough, what happened yesterday? Well, if you're a trader, you know what happened yesterday. The market took a dive. Here is the E-mini 3-minute chart from yesterday. And yesterday at 9:30, the market started out at around 45.32, which was my call of the support level of yesterday's trading zones. A trading zone is a calculation based on the average of the past several days' price activity. Trading zones are accurate. They accurately reflect support and resistance levels for the following day based on averages of price activity. Because the average is the average of recent past prices, that means that the trading zone is going to be accurate if the current trend continues. Now, if the current trend had continued, which it didn't, prices would have traded mostly within this trading zone yesterday between 45.32 and 45.43. They didn't. What happened was the market opened, prices dove down, ended at 45.18, and I put a horizontal line here indicating yesterday's market close. Now, of course, yesterday's old news. Let me move over to today, and I again put a trading zone in today. Trading zone goes from 45.27 to 45.31, only a 4-point trading range, very narrow trading range. But remember, this is caused by a shift in the market trend. The market has not followed the trends beginning yesterday. This morning, the market opened, and I have my cursor right here at 9:30. The market opened at 45.10. Now notice that the market went down to 45.07, but then traded up to close the gap at 45.18. So this is why I put these horizontal lines here indicating the previous day's close, because very often when the market opens significantly above or below yesterday's close, when that window forms, that gap is likely to be closed. So today we are trading in the markets already. This is at, I'm making this video, it's just before 10 a.m. And my trading zone is up here, which again is not going to be a proper reflection because we have a shift in the market sentiment from bullish to, gee, I don't know. And that's going to be reflected in today's prices. But notice where equilibrium is today. Now, remember, equilibrium is a point where buyers and sellers agree on the price, more or less. And what typically happens is the market will trade up out of equilibrium, back to equilibrium, down out of equilibrium, then back up to equilibrium. And this is why so many people lose money in the market, because what happens is that they chase the market up, and then the market the market then backs down into equilibrium, and they bought their contract or contracts, and the market briefly shows them in the green, and then the market trades back down to equilibrium. Their profits turn to losses. they get nervous, they sell out at a loss. And it's the reason why most traders lose money, because they chase the market. The market goes up to the trading zone and then back down to equilibrium. If you can teach yourself to find the setups where you enter where the market meets your entry point, you'll be far better off than trying to chase the market. Anyway, I hope you learned something, and if you want to learn a little more, check out my course at timelessdollar.com, especially my free course where I talk about how to manage risk, and of course trading is all about managing risk. So check out my course at timelessdollar.com. I'm going to end this video, get it up on YouTube. Let me remind you of one more thing. Tomorrow, September 9th, is contract rollover day. That means that we're going to roll over to the December contract. And that contract is the Z letter. The Z letter. We're trading the U letter. So you're going to be trading ESZ. So roll over your charts tomorrow to the December contract. Anyway, this is Marv Eisen again. Have a safe trading day, and thanks for watching.